Intel jumped more than 8% Tuesday after Yahoo Finance reported that Intel Foundry had signed its first named outside customer under CEO Lip Bhutan. And that deal landed 2 days before Intel reports June quarter earnings after the bell tonight. The move pushed Intel's market capitalization to roughly $530 billion. This is not a rumor trade or a sentiment shift. One named customer in a manufacturing agreement changes the story from Intel says it can compete in Foundry to Intel has closed at least one deal to prove it. Intel Foundry Services is Lip Bhutan's defining restructuring bet. The strategy, compete with TSMC, Samsung Foundry, and global foundries to manufacture chips under contract for third-party customers, not just for Intel's own processor lines. TSMC built its entire business on that contract model. Intel is attempting the same pivot while simultaneously running a PC and data center chip business against those same companies. The foundry build-out has attracted federal support along the way. Intel received its first CHIPS Act grant tranche in March 2026 as a part of its U.S. fab expansion program. Before today, Intel Foundry had 0 named external customers in active manufacturing agreements. Every investor presentation included language about customer conversations in progress. Today, that changed. A named third party has signed a manufacturing deal. The significance is structural. Foundry economics run on volume. The fixed costs of building and operating a semiconductor fabrication plant are enormous, and per unit economics only improve as more customers fill that capacity. One customer proves the template works. The question now is how quickly Intel can replicate the deal. A second development out today adds another layer. Per news coverage this morning, Intel is in reported discussions about a co-investment partnership for its Ohio Foundry facility, with SK Hynix named as one of the strategic candidates. SK Hynix is one of the world's largest memory chip makers and a key high-bandwidth memory supplier to NVIDIA. A co-funding arrangement would reduce Intel's capital expenditure burden on the Ohio project while bringing a credible industrial partner into the U.S. manufacturing ecosystem. No deal has been confirmed. This is still at the reported discussion stage. Tonight's earnings arrive in a favorable sector context. Texas Instruments reported second quarter results yesterday, beating both revenue and earnings per share estimates across its analog and embedded chip segments. A read-through that broader semiconductor demand is holding up. For Intel specifically, the Wall Street consensus earnings per share estimate for the June quarter stands at 10 cents, as cited in earnings preview coverage published this week. That is a low bar after years of margin compression. A beat on that number paired with constructive foundry commentary could be the combination tonight's call needs. The harder question is not whether Intel can sign customers. It's whether the foundry unit can become profitable. The segment is absorbing substantial annual losses to fund 18A process node development and fab construction simultaneously. That capital burden carries a real cost. The 10-year Treasury yield stood at 4.6% as of July 20th, per Federal Reserve data, and the federal funds rate sits at 3.63%. Intel's core business cash flow has to bridge the gap until foundry reaches break-even. The transition from specification sheet competitive to profitable in production is where Intel turnaround narratives have historically stalled. 3 specific risks sit between today's move and a sustained foundry turnaround. First, customer concentration. One named customer is proof of concept, not a business. Foundry revenue needs multiple customers to cover fixed costs at scale. Second, process node execution. Intel has a documented history of manufacturing timeline delays, and any slip on 18A would reopen credibility questions with potential customers evaluating whether to trust Intel with their most sensitive chip designs. Third, core business pressure. If CPU margins have compressed further this quarter as Intel redirects resources into the foundry build-out, tonight's earnings number could create direct tension with today's stock gain. Watch for 2 specific disclosures on tonight's earnings call. First, the Intel Foundry segment's operating loss for the June quarter. If that figure is narrowing quarter over quarter, the capital ramp is trending in the right direction. Second, management commentary on 18A customer qualification status and the breadth of the pipeline. If executives name a second customer or disclose a design win count, That becomes the next quantifiable catalyst. If the language stays at conversations in progress, the market will have to judge whether today's first-name customer was the beginning of a trend or a single transaction that took years to close.